Welcome back. Mortgage demand has stalled over the past month as interest rates remain elevated. In today's video, I'll share some more leading indications of our housing market so you guys can be more informed, including the number of real estate showings, pending home sales, and much, much more. I have a lot to share in today's video. Thank you so much for joining me in today's video. I appreciate you, and let's begin. This first report I want to share with you guys was just announced today, which is on April 3rd. It says applications decreased by 0.6% from 1 month ago, or 1 week ago, I should say. However, this is based on refis plus applications for home purchases. So the refi index decreased compared to the previous week, also was down from 1 year ago. No big surprises. Again, what I'm more focused on is this right here. Their seasonally adjusted purchase index. An easy way to think of this is that a rise in their index means that more people are submitting loan applications to buy houses. So that decreased slightly, down by 0.1% compared to last week, but still down by 13% on a year-over-year basis. Here's a chart showing just that. Applications overall, just like I mentioned, over the past 1 month have been fairly stagnant, stalled out, haven't really had much growth at all over the past 4 weeks. On top of that, look at the 5-year chart here. It really peaked in, when was this? In late January 2021. We did see an uptick in the early parts of 2022, but thereafter, applications by houses have been falling off the map. One of the reasons why I shared this weekly report from the MBA is because this is very much a leading indication of future home sales in the next 1 to 2 months. However, it's not perfect though, because right now, approximately a third of all home sales are going to a cash buyer. That's based on data from the National Association of Realtors. Therefore, of course, a cash buyer is not submitting a loan application to buy a house, and therefore the data here is not perfect, but it's a loosely tied indication of home sales in the next 2 months. Getting back to the MBA's report, according to Joel Kahn, who's the MBA's Vice President and Deputy Chief Economist, he stated the following: elevated rates continue to weigh down on home buying. Purchase applications were unchanged overall, down 0.1% from 1 week ago, but still down 13% year over year. Although FHA purchases, these are people who are putting down 3.5% down to buy a house, a very popular loan program that first-time homebuyers use. However, you do not have to be a first-time homebuyer to use an FHA loan program. So FHA purchases did increase slightly over the week. And of course, refi applications are still down from 1 month ago and also from 12 months ago as well. I'll get back to an update regarding rates because rates have been on the rise. But first, I want to share this with you guys because this is pretty wild because they look at all the applications for purchases or refis. Approximately a third of those are going to people who are refinancing right now. The share, for example, is at 30.3% of all applications this last week. Also, the ARM share of activity still remains very, very low at 7% of all application numbers. That's a positive sign because we don't want to see people submitting applications to do ARMs or a big increase in that because that is a much riskier loan product compared to a 30-year fixed rate mortgage. So speaking of rates, as of today, which again is April 3rd, by the way, thank you so much for joining me in today's video. I appreciate you. Also, if you guys are getting any value out of today's video, please hit the like button. Anyways, for today, the average 30-year fix is at 7.31%. Again, the rates quoted on Investopedia.com tend to be a little bit higher compared to other websites. And that's because of this right here. They're looking at a FICO score in the range of 700 to 760. However, according to the Mortgage News Daily, which is right here, they look at a FICO score at 780 buying a single family house. You're going to be moving in there, not an investment property. And on top of that, putting down at least 25% down, whereas Investopedia.com looks at a loan to value ratio of 80%, meaning if you're going to buy a house, you're putting 20% down. So because of the wider range of FICO scores and also the loan to value ratio at 80%, this is the reasons why they're higher compared to the Mortgage News Daily. So anyways, according to them, Rates did increase slightly today, which again is the 3rd of April. To start today, the 10-year Treasury note, the yield on that spiked, but then it decreased. So that's why rates are relatively flat, or one of the main reasons why rates are flat today at 7.07%. FHA and VA loans is around 6.5%. And by the way, the average 30-year fix 1 year ago was at 6.44%. That's an increase of 63 basis points from 12 months ago. Also, looking at the chart here above, over the past 1 year, something I found to be interesting that you guys should also be aware of as well, because this is impacting sales and prices right now, is that ever since mid-May 2023, the average 30-year fix has been at or above 6.6%. And because of these stubbornly high rates we're seeing right now, this is impacting closed home sales. I'll talk a little bit more regarding that here in a little bit. But first, I want to share this with you guys. This is according to showingtime.com. They basically look at the number of real estate showings across North America, houses compared to the first week each and every year. So the most recent data we have from them is through April 2nd. So this year, the number of real estate showings, these are real estate agents showing houses to their home buyers, that increased by 14.6% compared to the first week this year. At this time last year, we were up by 21.1% compared to the first week last year. I also have an update from the National Association of Realtors in corroboration with Central Lock, which is a lockbox company. And this lockbox company, Central Lock, basically tracks the number of real estate showings across the United States. So as I reported to you guys about a week or two ago, they reported that January's foot traffic, or real estate showings, decreased by 5% in January compared to January 2023. That got reversed though, because just posted a few days ago here, real estate showings on a national level increased by 4% on a year-over-year basis this February. This is pretty remarkable, but it does vary by the region. Of course, real estate is local, right? So here's a look at each of the 4 major US regions. So the South led this gain because the South experienced an increase of 10% more real estate showings this February compared to February of 2023. Whereas the Northeast fell by 5%, the Midwest and the West were flat year over year. Okay, let's change gears slightly here and talk about Redfin's Homebuyer Demand Index. They have an index which measures more or less the number of real estate showing requests they get from their agents. That is at a 3-year low during this time frame, at least a 3-year low, and also 8% below last year's levels. So overall, not a lot of activity regarding home buyers from Redfin. Also, when looking at homes for sale on Google Trends, the number of people searching for homes for sale is at 74. They're indexed at 74. 1 year ago, we're at 88. This means there's approximately 16% less interest for homes for sale on Google compared to 12 months ago. In addition, we haven't seen a whole lot of changes this year as well, because Google searches have been relatively flat all year. One more report I want to share with you guys, and then I'll provide a summary of today's video and kind of my insights regarding what does this data really tells us. So regarding from the National Association of Realtors, they posted on March 28th that pending home sales, a measure of contracts being signed between buyers and sellers of existing houses, excluding brand new home construction, that increased by 1.6% from January to February this year. However, it did decrease on a year-over-year basis, down by 7%. Also, according to NAR, their pending home sale index varied quite a bit depending on the region. So for example, compared to the previous month, which was January again, pending home sales increased by 10.6% in the Midwest. They increased by 1.1% in the South, yet they decreased by 6.5% in the West and decreased slightly by 0.3% in the Northeast. All right, that was a lot of info to cover in today's video. So I'm going to provide a summary and also my take regarding this data here. So applications to buy houses have stalled over the past month, likely from stubbornly high interest rates. Meanwhile, average interest rates have been at or above 6.6% ever since May of 2023, almost a year in which rates have been at or above 6.6%. And because of that, that has limited the number of home sales nationwide and also the number of new listings as well. Meanwhile, home prices are up from a year ago, which is making housing affordability at very low levels. So according to data from Redfin, the median sold price of existing houses is up by about 5%. On top of that, we have high rates right now, higher compared to a year ago as well. Also, the number of real estate home tours or real estate agent home tours increased by 4% this February from 12 months ago, according to NAR. That could be potentially due to the fact that we have more houses for sale right now and more houses being listed for sale overall. New listings and active inventory. In other words, the amount of people listing their houses for sale and also the total number of houses for sale nationwide is up by double digits year over year, according to the most recent stats we have from Realtor.com. A peek ahead, in my opinion, this is kind of my own take, so please leave me a comment below with your thoughts regarding this. But this data overall in today's video, again, it's a look at early indications of home buying demand in our US housing market. This data points to a low level of existing home sales in the months to come, in my personal opinion. Inflation is also much higher compared to the Fed's target at 2%, so that should keep rates elevated in the near term. Of course, incoming data could change this outlook though. So for example, if inflation goes down faster than what is forecasted, that would likely cause rates to decrease faster as well. And lastly, this is a really important one. I appreciate you guys watching today's video. If you guys haven't subscribed just yet, I post frequent housing market updates so you guys can be more informed. So I invite you guys to subscribe to this channel. Also, if you guys got any value out of today's video, please hit the like button. Also, if you're interested in buying or selling a house, I really mentioned this on the channel, but I am a real estate agent with my team here. If you guys are interested in buying or selling a house in the greater Sacramento area, please email me at jason@meetjasonwalter.com. Or if you're looking to buy a house anywhere in the United States, I have a network of real estate agents that I work with, and I'd love to connect you with a great real estate agent. So you also can email me at jason@meetjasonwalter.com. I appreciate you for watching today's video. Like and subscribe, and we'll see you in the next video.